Oxford Economics Africa Watchlist 2026 indicates that the continent will continue to experience economic expansion this year, though growth will vary significantly across countries. Major sub-Saharan economies are projected to grow between 3.2 and 4.6%. Trade tensions are expected to persist, with Chinese exports to Africa potentially rising as Beijing seeks alternative markets due to reduced access to the United States. For more on this, we joined on the line by Jacques Nel, who is head of Africa Macro at Oxford Economics. A very good afternoon to you. Welcome to Africa in Business.
Good afternoon, Thami. Thanks for the invitation.
Lovely. So you forecasted that African economies to moderate growth trajectory in 2026. There's going to be growth ranging from 3.2 to 4.6% for major sub-Saharan economies, according to the report. What will be the key drivers of this economic growth? And where specifically in Africa are these expected to happen? Which regions or countries?
Yes, that is quite a wide range, but I think firstly it's important to note that despite all the negative recent headlines in recent months, the external environment has actually improved quite a bit in recent months, and especially when compared to a few years ago. So recent commodity price dynamics have really benefited the continent, with mineral prices surging, oil prices slumping. So most African countries have seen a big boost to their terms of trade. A weaker dollar is of course great for the continent. It makes it a lot easier to pay or repay your external debt. A weaker dollar and lower oil prices is of course beneficial to contain inflation, which is a perennial problem on the continent. And lower inflation has facilitated lower interest rates, not just on the continent or in most countries, but in the US as well. And this is of course really good for growth. In terms of which countries, in Southern Africa, the major commodity exporters, so Zambia and DRC, Zambia a major copper exporter, DRC copper and cobalt, they are expected to see really good years this year. Just last week, we saw S&P improve the DRC's outlook on its sovereign credit rating. Some of that was due to some fiscal reforms, but a lot of that was due to the outlook for mineral receipts. But just sort of generally speaking, we see the best growth on the continent in East Africa this year. In Uganda, we just saw the presidential elections wrap up. It looks like there won't be too much trouble there, and Uganda is expected to produce its first oil this year. That will be a significant boost to growth. In Ethiopia, they've implemented some pretty tough reforms in recent years, some IMF-backed reforms, and now we're finally starting to see some of those fruits. So there we expect strong growth. Rwanda has been one of the strongest growing economies for some time now on the continent, and we expect that to continue this year. They're benefiting somewhat from mineral exports, but just a sort of a general expansion of basic and modern services in the economy. And then just finally, Kenya. It looks like Kenya is moving past its pretty severe fiscal troubles that it had recently. We expect it to clinch an IMF deal this year, hopefully sooner rather than later, and that would sort of just be the confirmation that the economy is moving beyond its fiscal troubles and that its outlook has improved.
You did mention, Jacques, the impact of the United States, the weaker dollar, etc. And we are seeing these geopolitical tensions continuing and very much impacting trade as well. As Oxford, you've highlighted that there could be a potential surge in Chinese exports to Africa in response to the US trade wars, and as those continue. Can you give us your insights on the prospects for Africa's trade with China, with the EU, as well as the United States in the year ahead? And also perhaps how trade diversification strategies will accelerate economic resilience?
Yes, I think the really interesting dynamic to keep an eye on there is China. So just for some context, last year already, between the first and the third quarter, Chinese exports to Africa already rose by around 30% year on year. And the trade surplus with Africa increased by nearly 80%. So Africa is clearly going to play an important role in China's diversification efforts away from the US. There's also some concern regarding the nature of trade between Africa and China, because nearly 90% of African exports to China is in the form of raw materials, while roughly 50% of imports from China are manufactured high-valued goods. So the thing is that China is clearly doubling down on its exports growth strategy because it's got some pretty severe economic troubles at home. Its consumer base isn't picking up the way it wants to. Its property sector is still in big trouble. So what we think is going to play out this year is that the surge in exports, especially manufactured goods, is going to put a lot of pressure on African industrialization efforts. Even more so than in the past, just because of this renewed focus from China on Africa. But given that it's China, we think that it's unlikely that we would see aggressive sort of tariff or quotas being put in place by African nations, just considering the importance of China from a trade, a credit, investment perspective. So on the upside, what we could see is that a lot of African nations sort of refocus their industrial policy on encouraging FDI, perhaps in special economic zones, to sort of curtail some of the more pressing infrastructure needs on the continent, like energy transport, where they sort of just focus their efforts on specific zones and get industrialization going through that, just because now they sort of have to, because now China, and I don't want to use the word dumping because of the negative connotation, but China's focus on Africa, that might require more industrialization efforts from the continent's part. And then, of course, there's the Africa Free Trade Agreement. This could prove to be that boost that the agreement really needs to get up off the ground if, Africa can trade more, look towards other African markets, because it's unlikely that they'll be able to compete with China given the goods that China is producing on the manufactured front. So maybe this could be the boost that the Africa Free Trade Agreement needs.
Jacques, debt stress continues to be a major challenge for countries on the continent. It's also something that was highlighted in the report. What key debt-related challenges should policymakers, investors, as well as businesses be monitoring this year?
Well, as I mentioned, there's a lot of good news. So a weaker dollar makes it a lot easier to repay your debt, and interest rates are lower than recent years, and they are expected to drop further. So, and a lot of the other factors that I mentioned are sort of conducive to markets looking at African sovereign debt. So a weaker dollar makes other currencies a bit more attractive. Lower yields in advanced economies make the pretty high yields for African sovereign debt also look a lot more attractive. And many investors may be thinking that maybe advanced economy stock markets and commodities like gold might be looking a little bit frothy, and they might not want to put their money there now and rather look for some decent yields elsewhere. So my point here is that the external environment has improved quite a lot, and it's going to be a lot easier for African governments to issue debt now. So some of those fiscal concerns could be sidelined. And that is a real risk if sort of the focus on getting the fiscal house in order dissipates and there's free money, or not free money, relatively cheap money available again. We could see some of the gains made recently on fiscal reforms, engagement with the IMF, a lot of those being backtracked. So I think that is a real risk. Something to keep an eye on is those economies that have implemented major reforms. So here I'm thinking about Nigeria, Ethiopia, and Egypt. Are they going to keep those in place, or are they going to stay on that track? That would be positive. And then just countries that have improved their collaboration with the IMF. So again, Ethiopia, Egypt, Ghana, are they going to remain engaged? And that would then sort of be a positive sign to investors that they are not going back into their old ways, and that the fiscal situation should improve going forward.
Thank you very much, Jacques. We'll leave it at that for this afternoon, but a really comprehensive report there. Thank you for your time.
Thank you.
Thank you. That's Jacques Nel, Head of Africa Macro at Oxford Economics. There's something else that we didn't quite manage to touch on because of time, and that is the currency adjustments that are likely to be made in the coming year. Last year, 2025, we did see countries like Botswana and Libya devaluing their currencies. The report also flagged potential devaluations in 2026. So it really is worth a read. It's the Oxford Economics Africa Watchlist 2026. you can just go onto their site to take a look at that and go into greater detail.